Folks, let me tell you something. You hear these stories, right? Some whiz kid barely old enough to drive, supposedly making millions from their bedroom computer. You might think it's just a fairy tale, something cooked up to sell you a dream. But I'm here to tell you that while overnight fortunes are rarer than a truly free lunch, young people achieving incredible financial success through smart, disciplined effort is absolutely possible. Imagine a 17-year-old, not born with a silver spoon, but with a hunger to learn and a willingness to work. This isn't about lottery tickets or some get-rich-quick nonsense. It's about understanding how money really works and putting in the hours. This young person we're talking about didn't just stumble into wealth. They made a plan. They decided they wanted something different, something more than just waiting for life to happen to them. They saw an opportunity in the world of trading, a place where knowledge, strategy, and discipline can lead to significant rewards. It wasn't easy, mind you. Alright, let's get straight to it. Why should a teenager, someone still figuring out algebra or what to wear to prom, even think about trading? Well, let me tell you, learning about trading is one of the most practical, real-world skills you can pick up, and starting young gives you a massive head start. Traditional education is important, no doubt about it. It teaches you history, science, and literature. But how much time does it spend teaching you about how money actually works in the real world? Trading, when approached correctly, fills a huge gap in that financial education, teaching you things your textbooks probably won't. Think about it. Learning to trade involves understanding economic news, analyzing company performance, and managing risk. Now, it's super important we clear something up right off the bat. You'll hear the words trading and investing thrown around, sometimes like they're the same thing. Folks, they are not the same. They're as different as a sprint is from a marathon, and you need to understand that difference before you even think about putting a single dollar on the line. Both can help you build wealth, absolutely. But they go about it in very different ways, with different time frames, different strategies, and frankly, different levels of stress and activity. Knowing which path or combination of paths is right for you starts with understanding this core distinction. Investing, in its classic sense, is like planting an oak tree. You buy something you believe has long-term value, like shares in a solid, reputable company, or a mutual fund that holds a basket of those companies, and you plan to hold on to it for years, even decades. The goal is to let it grow slowly and steadily over time, riding out the short-term ups and downs of the market. Think about your retirement accounts like a 401k or a Roth IRA. That's investing. Alright, so you're intrigued by the idea of trading. You see the potential for learning and maybe even earning, but where in the world do you start? It can seem like a huge, complicated mountain to climb, but like any big goal, you tackle it one step at a time. The first thing you need to do is forget about making $1 million by next Tuesday. That's not a plan, that's a lottery ticket fantasy. Your first step is education, plain and simple. You wouldn't try to fly a plane without lessons, would you? So don't try to trade without learning the basics first. Start by reading. There are tons of great books, websites, and courses out there designed for beginners. Look for resources that explain basic financial terms, how the stock market works, what different types of assets are, like stocks, bonds, ETFs, and the fundamental principles of buying and selling. Don't get bogged down in overly complex strategies right away. Focus on understanding the core concepts: what makes prices move, how to read a basic stock chart, and the importance of things like market capitalization and earnings reports. Absorb information like a sponge, but be critical. Section 5. Picking your gear. The best trading tools for young guns. Okay, you're ready to get your hands dirty, at least in the practice arena. To do that, you need some tools. Just like a carpenter needs a good hammer and saw, a trader needs the right platform and resources. Now, for beginners, especially teenagers, the key here is to keep it simple and user-friendly. You don't need the most expensive, complicated setup used by Wall Street professionals. You need tools that are easy to understand, offer good educational resources, and most importantly, provide a reliable demo account feature. Let's talk about what to look for. First up is the trading platform itself. This is the software or website you'll use to view market data, analyze charts, and place your trades. Many online brokers offer their own platforms. For young traders, look for platforms with a clean interface, intuitive navigation, and readily available customer support. Some popular brokers known for being beginner-friendly include names like TD Ameritrade with its Thinkorswim platform, which has an excellent paper trading mode, Fidelity, or even some of the newer app-based brokers like Robinhood or Webull, though be extra careful with those and understand their business models. Section 6. The $1 Million Mindset. Winning between your ears. Folks, I can give you all the strategies and tools in the world, but if your head isn't screwed on straight, you're going to have a tough time in the trading arena. Success in trading is probably 80% psychology and 20% strategy. That might sound like an exaggeration, but I promise you, managing your emotions, staying disciplined, and learning from your mistakes is far more important than finding some secret indicator. This is what we call the winning mindset, and it's something you have to actively cultivate every single day. It's about winning the battle between your ears before you even place a trade. One of the biggest hurdles for new traders, and even experienced ones, is dealing with losses. Let me be crystal clear, you will have losing trades. Everybody does. It's a part of the game. The key is not to let those losses derail your entire plan or send you into an emotional tailspin. A losing trade is not a reflection of your worth as a person, it's simply feedback from the market. You need to learn to accept small losses gracefully, analyze what went wrong, if anything, sometimes the market just does its thing, and move on to the next opportunity without trying to revenge trade to win it back immediately. That's a recipe for disaster. This brings us to the importance of learning from your mistakes. Section 7. Practice Arena, Mastering Moves in a Demo Account. Alright, we've touched on this before, but it's so critical it deserves its own spotlight. I'm talking about the demo account, or paper trading. Folks, if you take only one piece of advice from me about starting to trade, let it be this. Spend serious quality time in a demo account before you even think about trading with real money. This is your practice field, your flight simulator, your sparring ring where you can get knocked down without actually getting hurt. It is, without a doubt, the single most important tool for a beginner trader, especially a young one. Section 8. A simple plan, your first trading strategy. Okay, so you're learning the ropes, you're practicing in a demo account, but you need a plan, a strategy. New traders often get overwhelmed by the sheer number of complex strategies out there. Forget all that fancy stuff for now. You need something simple, something understandable, and something you can execute consistently. I'm going to give you an idea for a basic strategy, often called support and resistance trading combined with trend following. It's not a magic bullet. No strategy is, but it's a solid starting point for understanding market behavior. First, let's talk about support and resistance. Imagine a stock price is like a bouncing ball. Support is like the floor. It's a price level where the stock has historically had trouble falling below. Buyers tend to step in at this level, pushing the price back up. Resistance is like the ceiling. It's a price level where the stock has historically had trouble breaking above. Section 9. Beyond the hype building real financial freedom. So, we've talked about the exciting possibility of a young person making smart moves in the market. We've covered the difference between trading and investing, how to get started, the tools you need, the mindset required, and even a basic strategy. But let's bring it all home. What's the big picture here? It's not just about chasing quick profits or boasting about being a trader. It's about something much bigger and much more important. Building a foundation for lifelong financial well-being and, yes, potentially, financial independence. This journey is about empowerment. The skills you learn from disciplined trading, understanding risk, analyzing information, controlling emotions, sticking to a plan, these are life skills. They'll help you whether you continue trading actively or simply become a more informed investor for the long haul. Financial literacy is freedom. Understanding how money works, how to make it grow, and how to protect it from foolish mistakes gives you choices. It gives you the power to design a life that isn't dictated by debt or financial stress. That's a goal worth striving for, far beyond any single winning trade. Remember that 17-year-old we talked about at the beginning? Their success, if real and sustainable, wasn't built on luck.